What's up, weirdos? What's going on, guys? How the hell are you today? All right, Bitcoin trying to make a move. See what happens here, guys. Looking good, looking gorgeous. Big things popping, little things stopping. $119,433 breaking to the upside of this bull pennant. However, I would say to you, keep in mind, it doesn't matter where these candles wick to. It matters where these candles close, right? So we still have about, what do we got? 130, 230, 330, 430, 530, 630. We got about 5.5 hours, 5 hours and 33 minutes until we see this next daily candle close. So we could be way the hell down here by the time that, or we could be way through $120,000. Check the poll in the comment section, guys. Make sure you participate. I want to know what you guys think. Is Bitcoin going to break through $120,000 tonight? So far, 87% of you guys think that we will, in fact, break through 170K tonight. We're going to be here for every little bit of it, guys. What do we got going on? We got 161 people watching. We got 40 likes, guys. Let's get the likes up. Smash them, hit them, crack them, whack them, whatever it is you got to do. Get those likes popping. All right, let's get into the super chats to start things off. Let's dive right into these mofos. Jarrett, as the days go on, I get more and more excited for what we've all been preparing for. You're the best there, Rob. There is, Rob. Thank you for everything. Hey, Jared, I got your back, brother. I got the fries that'll cross your eyes. I got the shakes to makes you quake. Ramona, I'll be in and out because I'm meeting, because of a meeting, but just want to drop in and say thanks, Rob, for all he does. Let's keep those lights up, Ramona. God bless you. I appreciate you. I hope your meeting's going well. I hope you could jump in from time to time through the stream because we love hearing from you. Absolutely. Strawberry Dragon's in the house. My husband is jealous that I listen to you better than him. I told him Rob helps me make money, and you make me cook and clean. Very fair. Very fair. That's good. That's good. I appreciate you guys. Thanks for the laughs. That's awesome. That's awesome. Let's get into the chat a little bit, guys. What the hell's going on out there today? As Bitcoin is pamping, let's see. We're going to look at Bitcoin dominance in a bit. We're going to have a look at the total too. Is Bitcoin stealing some of the dominance back? Is it a tug of war between Bitcoin and the altcoins? We're going to have a look at that. We're going to have a look at Ethereum. We're going to have a look at the M2. We're going to have a look at all the things you want to see. All right, Danny, good to see you, my friend. Good to see you. William, I see you, my dude. I see you, man. Nick Powell in the house. Nobody makes me bleed my own blood. Nobody makes me bleed my own blood. Little dodgeball there for you. Mario, get it, boy. What's up? Crypto Future. Good to see you, man. Me again. We got the movie quotes all over the place today, guys. We got movie quotes all over the place in the chat. I love it. Let's make it fun. Let's make it spicy. Let's make it spicy. We're into the movie quotes. Well, what the hell, guys? What the hell? Haters are out there right now. The Zebek haters sitting there as we speak.
I started this company. You know how much I sacrificed?
Haters gonna hate, guys. Haters gonna hate. The Zebek haters in full effect. What else do we got? Leo, good afternoon, everybody. Smash the like button. Absolutely. Beebs, my dude. Good to see you, man. Quentin, I see you, buddy. John, good afternoon, my brother in Christ. I hope all is well. Thank you for all you do. The Patreon is the best place to make real money. Absolutely. Guys, listen, we just did a microcap gem the other day. 200% return on that, guys, in like 24 hours. What are you waiting for? It's less than a cup of coffee. Get over to the Patreon. Crypta says, make sure you hit that like button. Yes, what do we got? 203 people watching. We got 58 likes. Let's keep it going. Keep it growing, guys. Let's get it to 200. Jake the Snake. Roberto, I think we just passed a sign that said, welcome to Pump City, population us. There you go. Babes, good to see you over on Crypto Blueprint as well, my friend. As always, guys, also make sure you're hitting the subscribe button. It helps the channel grow. We need 21 subscribers to get to 14,000. Let's get it going, guys. If you're watching and you are not subscribed to the channel, help us push that to the next level, guys. 14K, let's get it. 21 subs. Spuds, I see you, brother. Paul, good to see you again, my friend. H. Barbarina in the house. Jesse and James, what's up, Rob Father? I'm pumped for the pump you keep telling us about. I want to experience greatness. My friend, you are already great. You're not broke, you're pre-rich. Remember that. Strawberry Dragon, hopefully we can hire someone to clean soon. Nice. Alex, good to see you, buddy. Envy, my baby Stronghold pumping again. Is Stronghold pumping again? It was taking no prisoners yesterday. It is up another 50% on the day, guys. Stronghold up 78% on the week, 93% on the month, guys. Listen, I told the Patreon members about 2 weeks ago to load up on Stronghold, and it is going absolutely ballistic. You should be over there if you want to make the real cheddar. Big Botto, what's up, buddy? Good morning, fam. Don't forget to hit the likes. Thanks for all you do, brother. Hey, man, no problem, my dude. No problem. I got your back. You know what it is. You know what it is. Let's keep going. Ramona says, how's Swift looking? It usually runs with Jasmine and XCN, but it is slacking. Let's go look at Swift's chart. Let's look at Swift's chart. Swift. Yeah, I just covered a little bit of an update on Swift there. Wow, Swift did. Look at this monster wick on Swift. Talk about a tease. Talk about a tease. Look at. We tried to have the breakout here, right? Let me zoom in so y'all can see it here. I don't know if you can see the wick. Right? Look at this. Look at this wick. We wicked all the way up to resistance at 1 cent 486. And then right back down inside the bull flag, guys. We are in a bull flag. We need to get back up over here. And I think Bitcoin dropping earlier this morning probably caused that. Can Swiftcoin confirm this breakout? We need a breakout above this trend line, and we need to close there for Swiftcoin to continue its breakout. Guys, this next breakout on Swiftcoin, it's going to be fun, guys. It's going to be fun. Everyone's going to be saying, well, why is this happening? It's happening, baby. It's happening. The next real resistance, you might get a little bit of static right here. Once you get above 1 cent 48 level, you are going to see a straight shot up around this area here, guys, around that 1 cent 8. 1 cent 8. It's going to be super fantastic. Rich, watching Caesar and another YouTuber on Zebek. Can you please take a look at what Zebek is going to do? I look at what Zebek's going to do every day, my friend. Every day. Absolutely. Well, we're just sitting at resistance right now for Zebek, my friend. Right? You've got resistance right here at 2042699. You're going to have to break above there. You might get a little bit of static around 2046, but I think that you're going to have, if you can close above resistance here, your next move is going to be somewhere up inside your golden pocket between 2005 and 2055. You're going to get back up inside of here, probably build some sort of a bull pennant and continue to the upside. But Zebek's looking sexy. Absolutely. What else do we have? Where was I? Oh, there I was. Okay, Nando, what's up, buddy? I see bull pennants everywhere. Tyler, sorry I lied. Screen wasn't updated, it seems. There you go. There you go. Jared, if you can dodge a wrench, you can dodge a ball. There you go. Princess Alex, you picked up XRP rub. I've held XRP for over 7, probably almost 8 years now, man. I did not buy any today, no. Liquidity, the more liquidity in the market, the better. With ETH and BTC doing well, the alts will do amazing. Yes, you are absolutely right. I'm going to take advantage of this dip before it really goes parabolic. Good idea. Another local says DCA on Swift. There you go. Vam, been a while since I heard anyone talk about Swift. Yes, we love Swift coin here. One of my biggest bags, if I'm being honest. Ozzy Osbourne. Did Ozzy Osbourne pass today? I haven't seen anything about that, Devin. Is that true? Big whales are swallowing up Jasmine, 10 billion on exchanges out of 50 billion. There you go. Richie Rich, I'm buckled up waiting for the launch to come. Let's go, man. TARS AI looks like it's been stuck in a bull pennant since April. Let's go. Absolutely, guys. All of these altcoins are primed and ready to go, guys. You got to understand that, right? Yes, it's true. It's all over the news. Unfortunately, oh, that sucks, man. That sucks. Yeah, I'm a big Aussie fan. That's too bad, man. Going off the rails, baby. Let's do it. Yeah, that's unfortunate. That is unfortunate. 248 people watching, guys. We have 76 likes. Let's get it up. Let's go, guys. 200 likes. Let's reach that goal. All right, let's get into the news a little bit while we are waiting for those likes to go up, shall we? Quick shout out to the channel sponsor, Decent Biometric Wallet, guys. 2-for-1 deal on the bios. Not your keys, not your coins. Simply use our link in the description. Get yourself a lights out, fantastic, make you want to slap your mama deal. Awesome, awesome product, guys. I love it. Easy to use. You can take profits on there, swap on there. You can even stake your stable coin or your crypto through the entire bear market if you so choose. Absolutely fantastic. All right, let's check out the news. S&P 500 hits record levels. Is Bitcoin price falling behind? The S&P 500 is a big equities-driven index that shows how the top 500 companies in the U.S. stock market are doing. On July 22nd, it hit a new record of 6,305 points. That means these companies like Apple, Amazon, and others are doing really well. And investors are super confident in them. At the same time, Bitcoin is trading around $117,000, $118,000. It's actually at $119,400 right now. It hasn't moved much while stocks have zoomed up. Over the last few months, Bitcoin and the S&P 500 have taken turns leading each other. For example, in March, Bitcoin rose faster and went ahead of the S&P. And in April, the latter dropped while the cryptocurrency stayed steady. Also, in late June, the S&P rose again and passed Bitcoin, despite Bitcoin making new all-time highs. These crossovers show when one market is doing better than the other. Right now, stocks are winning, but it doesn't always stay that way. Crypto sometimes takes the lead again when people get excited or new tech drops. Also, it is worth noting that Bitcoin did make an all-time high a while back, racing to $123,000 before cooling off. But then the chart might suggest that traditional stocks are doing slightly better. Right now, the connection between the S&P and between Bitcoin and the S&P 500 is still pretty strong. The latest data shows a 30-day Pearson's correlation of 0.72. Pearson's, sorry. That number tells us how closely the two move together. If it's 1, they move exactly the same. If it's 0, there's no correlation. No connection. If it's -1, they move in opposite directions. A 0.72 score means Bitcoin and stocks are still dancing at a similar beat. Though not every step in sync. While stocks rise, Bitcoin often follows. When they fall, Bitcoin usually slides too, but this wasn't always the case. Back in February of 2025, the correlation between Bitcoin and the S&P actually went negative, dipping to around minus 0.125 at a time. That meant they were briefly moving in opposite directions. Bitcoin was rallying while stocks were still under pressure from high interest rates and recession fears. It is one of the rare times crypto felt like it was doing its own thing. Another example came on November 4th, 2024, when the 30-day correlation dropped sharply to just 0.16. That was right around the time Bitcoin was climbing due to the ETF optimism, while the S&P was flat because the mixed earnings results. It showed that sometimes big crypto-specific news can break the usual link between the two markets. If the correlation starts to fall again in the coming weeks, it could mean that Bitcoin is beginning to move more independently, driven by its own market forces instead of following Wall Street. But for now, the data shows they're still pretty well connected, even if the pace isn't always perfect. While the S&P is up, BTC is flat. Why the S&P is up and BTC is flat? Well, number one, big tech companies like Nvidia, Apple, and Tesla have been reporting strong earnings. Investors are hopeful that inflation is under control in the US. More people are putting money back into stocks after sitting out earlier this year, and Bitcoin dominance is going down, and altcoins, including Ethereum, are seeing more capital inflows. If you look at momentum, Wall Street through the S&P 500 is moving faster than Bitcoin, but that's not the case if you consider other coins, or rather the altcoins. But this doesn't mean Bitcoin is done. Crypto often moves in big waves. Stocks might be getting love today, but Bitcoin could surge next week if something, look at the hiccups, if something major happens. Like a huge company starts accepting Bitcoin, or a new rule helps crypto go mainstream. In short, Bitcoin may still be correlated to the S&P, but the rest of the crypto market is not, and is moving at its own pace. You'll love to see it. If you are only looking at Bitcoin, keep the following aspects in mind. If the S&P keeps rising, more money might flow into stocks and away from Bitcoin for now. Also, if Bitcoin breaks above $120,000, it could flip the momentum back to crypto. You might want to watch the news like US crypto regulations or ETF approvals. These could give Bitcoin the spark it needs. And finally, if the correlation continues to push to 1, you can infer that Bitcoin might slowly be becoming less volatile. Big things popping. We got some more super chats. There she is, Gamma Goddess in the house. Happy Tuesday, fam. Let's get this money. Hell yeah. It's looking like a great day to DCA. I will be doing some DCAing after this live stream is over, guys. Listen, I did do some DCAing yesterday. If you want to know what I'm doing with my portfolio, what I'm buying, when I'm buying it in real time, get over to the Patreon for my buy and sell alerts. Chappie, what's up, man? Big XCN holder, need some hopium, please. XCN is going to absolutely wreck. Let's go look at the chart. Look at this chart on XCN. She is ready to pop, my friend. She is ready to pop. Look at this. Look at this bull pennant, man. She's going to run. How high is she going to run? Well, hang on a second, and I shall tell you, por favor. What do we have here? A breakout's going to bring you probably somewhere in the range of 2 cents, 4.5 area, somewhere around there. So you're about to have a nice breakout on XCN, my friend. The future is bright for Onyx Coin. No hopium needed. It is going to soar, brother. It is going to soar. Good to have you here, Chappie, my dude. What else do we have? See if we've got any more in the chat. Debating between DCAing into Swift or XYO. What do you think? I'd probably go with Swift Coin personally. That's my opinion. Not financial advice. You do you, boo-boo. Right? Cherokee Kid. My wife's getting jealous how much I spend on the Patreon, but she won't be when I buy her a new car. Making that cheddar. Here's the thing, guys. The funny thing about it is, whether you got a girlfriend, you got a boyfriend, you're married, whatever it is, I can tell you this for sure. I hear this story 100,000 times a day. That's probably an exaggeration, but I digress, okay? Everyone in their first cycles, significant other, has issues with them buying too much crypto, right? They're worried. There's uncertainty. They don't understand. They know nothing about it. They're going to give you static. But I promise you this. After this cycle is over and you take your profits, and they see your bank account, they're not going to ask questions in the next bull run, right? To take all the money. Take all the money. That's what it's going to be. Rich, what's going on, buddy? Good to see you, my dude. Good to see you. All right, let's keep it going here, guys. So we got through that. Let's go over to Squawk Box and see what's happening over there. Former Fed Chair Janet Yellen, markets rely on the independence of the Fed. Another BS story.
I just read a piece from the op-ed that you wrote with Ben Bernanke.
Yes.
And then I followed up by saying that we had talked to Scott Bessent, and we'd asked a similar question of actually Elizabeth Warren recently, which is, if in fact Jay Powell were to be fired, ousted, or otherwise pushed out, what would the market's reaction actually be?
Well, I think we got a taste of that when President Trump announced that he had shown a letter to Republicans that would call for Chair Powell's ouster. And while the market reaction was brief, what we saw was the exchange value of the dollar declined, longer-term interest rates moved up, and the stock market declined. Now, President Trump quickly said he had no plan to fire Chair Powell, but I think that gives you directionally a sense of what would happen. Look, importantly,
are you guys getting audio on this? Somebody's Miculus is saying that there's no audio. Can you guys hear Janet Yellen talking? Let me know in the chat so that I can continue here, guys. Let me know. No audio, says Miculus. Guys, let me know. Can you hear, or is it just him? Somebody tell me. Okay, so it's just you then, because Strawberry Dragon can hear, Black can hear. It's just you, man. It's just you. All right, let's continue.
Markets rely on the independence of the Fed and the Fed's commitment to achieving its congressionally mandated goals of price stability and maximum employment in assessing the soundness of the U.S. economy and their security in terms of returns they can expect investing in the United States. And when a president threatens to remove a chair unless he radically lowers interest rates with the stated purpose of helping the government finance its borrowing, not the congressionally mandated goal of price stability, but to ease financing costs on the outstanding federal debt. This is really disconcerting to markets, and what we've seen throughout history, both U.S. history and history around the world, is when that kind of pressure drives monetary policy in a country, high inflation is the inevitable consequence. And we've seen that in the United States as well. That happened during World War II. Ultimately, in the 40s, we saw double-digit inflation in the United States, and the Fed really rebelled, and there was an agreement in 1951 that the Fed should not have any obligation to help the Treasury finance its debt payments, but rather to focus on price stability and full employment.
Now, let me ask you this. There is a perception that the Fed has been wholly independent, that historically presidents have not made the kind of comments that this president has, and that this is all new. The truth is that to some degree, this is not new. You can go back 1965, you know the story, LBJ physically shoved Fed Chair William Martin against a wall at his Texas ranch as he was demanding that he lower interest rates. And I wonder, when you start to think about that story, or you start to think about the story that Paul Volcker used to tell about when he was brought into the Oval Office with Ronald Reagan, how we should think about the very concept of the Fed as an independent entity.
Well, you're absolutely right. There have been episodes in the past that we know about now where presidents have attempted to pressure Fed chairs. We've seen what happens when that occurs. and probably the most prominent example would be Richard Nixon exhorting Arthur Burns to hold interest rates down before the 1972 election. And what that ushered in the United States was a period of stagflation, weak growth, high unemployment, high inflation. And it really took Paul Volcker to come in, and it cost us a very deep recession to re-anchor inflationary expectations to get them down. So this kind of pressure, which has sometimes existed, but certainly not, in my experience, not during the Clinton administration or any subsequent administration that I'm aware of, we see that the consequences are very poor for the economy. We end up with higher inflation, worse economic performance, and it undermines the global role of the dollar and the willingness of foreigners to invest in the United States.
Secretary Yellen, on that point, there is a lot of concern about President Trump inserting someone from his administration directly into the Fed. There's this idea that the Fed is supposed to be apolitical, but I wonder if you think that was broken down to some extent when you went directly from chairwoman of the Fed to the Treasury Secretary, going directly into an administration, Lael Brainerd doing a similar move with that. I just wonder if you think that door between the administration and the Fed should be closed a little more tightly, more of a Chinese wall to prevent any sort of perception of a lack of independence at the Fed.
So it has not been uncommon. Many Fed chairs have had past experience in the White House in an administration. This was true of Greenspan as well. And I suppose it's natural because presidents come to know people who serve in their administration and gain confidence in their judgment. What's really important, though, is when an individual is wearing the hat of Fed chair, that they have the capacity and willingness to make fact-based judgments and to pursue the goals that are congressionally mandated, namely price stability and maximum employment. That becomes their job. And they have, I believe, whether it was myself or Bernanke or Greenspan, I think all of us were able to establish a track record for independence, staying out of politics, not succumbing in any way to short-term political pressures, behaving in a nonpartisan way. And the track record, by and large, although all of us are human and may have made some mistakes, I think the Fed's track record over many decades has been one that's been successful. We've had low and basically stable inflation. The post-pandemic experience was an exception, but look where we are in the economy now. Inflation is coming down and it's close to the Fed's 2% goal. The labor market remains strong with 4.1% unemployment. And really, the United States was like every developed country that experienced a surge in price pressures during and after the pandemic.
AKA, don't fire my boyfriend, please and thank you. That's what she's trying to say right now, guys. Listen, I think that what we really, really need right now to get this market moving in the right direction is the House Hippo pump, my friend.
It's nighttime in a kitchen just like yours. All is quiet. Or is it? The North American house hippo is found throughout Canada and the eastern United States. House hippos are very timid creatures and are rarely seen, but they will defend their territory if provoked. They come out at night to search for food, water, and materials for their nests. The favorite foods of the house hippo are chips, raisins, and the crumbs from peanut butter on toast. They built their nests in bedroom closets, using lost mittens, dryer lint, and bits of string. The nests have to be very soft and warm. House hippos sleep about 16 hours a day.
That looked really real, but you knew it couldn't be true, didn't you?
We need the house hippo pump, guys, in a full effect. Chappie, thanks, by the way. The internet is a scam. Yes, internet is a scam. It doesn't exist. It's a fugazi. What is this all about, this magic internet thing they're trying to convince me of? I'm scared of it. We got the scammer bots in the chat. Strawberry Drake says, that's the longest time I listened to a nursing home resident. Oh, man. Jake, I've been scammed. What is this electronic mail you speak of? Absolutely, man. Absolutely. Redonkulous. All right, what else do we have? We got the house hippo pump in effect. Let's check out the news. What do we have? 315 people watching. We got 103 likes, guys. Let's get those likes up to 200. We're working our way there. We're over halfway. Let's get it done, my friends. Nadix to the moon, absolutely. BTC broke 120K. We're at 119,800 right now. We have to close there, man. We have to close there to make it official. Ramona dropping that cheddar, 7 herbs and spices. We need to create the house hippo meme coin symbol HH. Yeah, I know. Hey, somebody wants to create it. I know I'm not doing it. I would end up rugging myself, like I said. So, house hippo for the win, baby. House hippo for the win. Absolutely. House hippo pump incoming, guys. $119,900. All right. What do we have? BTC exchange surge. Is the altcoin market about to explode? The cryptocurrency market is buzzing with significant Bitcoin exchange net flows spike. According to recent data from CryptoQuant, the latest analysis reveals a jump to 37,000 net flow peak, the stark indicator of capital movement that historically correlates with major market shifts. Let's go. A 2023 study from the Journal of Risk and Financial Management found that 68% of significant crypto market correlations or altcoin rallies followed similar exchange inflow surges, suggesting a potential turning point. This influx, detailed in the chart spanning 2017 to 2025, offers a rare long-term perspective for traders and analysts. As you can see, pow, there we go. Let's get more into it. The surge contrasts with a June 2025 Decrypt report highlighting $2.9 billion in Bitcoin ETF inflows over 13 days, pointing to a possible transition from institutional to retail-driven dynamics. While institutional investors have long been seen as stabilizing forces, this shift could challenge that narrative, with retail traders potentially driving volatility. CryptoQuant notes that such inflows might precede deeper corrections or fuel an altcoin rally. As capital rotates into alternative assets, this aligns with OKX United States July 21st, 2025 report, which observes miners capitalizing on price peaks, a pattern often linked to short-term bearish pressure. However, CryptoQuant cautions that past patterns are not foolproof predictors due to the evolving nature of the crypto landscape, the interplay between retail chaos and institutional resilience, as outlined. So basically, past results do not depict future results, but it's looking very, very juicy. Let's go back into the chat. Gamma Goddess, Ramona, if you make the community a meme coin, we will all invest. We love you. I'm I'm a weirdo who bought Jasmine and Zebek when it was called a scam because I listened to you, weirdo. There you go, man. Winning. Okay, finally it worked. There you go. Good to have you listening, man. Good to have you listening. What else do we have? Fed Vice Chair for Supervision, Michelle Bowman. Very important that we maintain our independence.
Reserve holding its large bank capital conference today, focused on regulatory and oversight reform. Leslie Picker joins us with Federal Reserve Vice Chair of Supervision, Michelle Bowman. Good morning, Leslie.
Hi, good morning, Andrew. Thank you. And Mickey, thank you very much for being here. It's a big day for you. Just 6 weeks into the role, you've moved very quickly with a slew of proposed deregulatory actions. And the level of capitalization at the banks is kind of a function of, it's a balance between economic growth and the safety of the banking system. So was there something in the macro backdrop that compelled you to make this slew of changes?
Well, I think we realized that we're 15 years past the financial crisis and the implementation of the Dodd-Frank regulations, and that it's time for us to take a look backwards to understand what's been working, what isn't working, what's duplicative and overlapping, and how we could have a more comprehensive review of what those, especially the capital regulations are, which is the whole focus for today's conference, and how we can have a much more rational, much less duplicative, less overlapping framework for banks, for the large banks, to comply with capital.
Was there something you felt like was holding back the banking system? I ask only because they just reported earnings and they were kind of, knocked it out of the park, profitability-wise. Did you feel like they were being held back in a way that was still, harming economic growth?
No, actually, I think that the capital framework is something that we've been engaged in and had committed to changing. We have several pending regulations like Basel III. We have a GSIB surcharge proposal that's been pending for over a year now. And then we've also committed to improving our stress test regulations and that process. So as a part of reviewing all of those in context, we wanted to make sure that if you make changes to one of those individual regulations, that we want to make sure that they all work together, because there is such overlap and interaction between those four pieces of capital. So we wanted to make sure that we had the opportunity to, one, understand what all of those expectations are, and two, make sure that as we're recalibrating some of them, that we arrive at the right level of capital for the system as a whole.
Do you feel like you have consensus among your peers in achieving this agenda? Do you have everybody on board with you?
So we're working very closely together, especially within the interagency context, because many of the rules that we'll be talking about today require an interagency agreement. But we also are working very closely, and I think you'll see from many of the proposals that we put forward that we have broad consensus from the board on some of the changes that we've been making.
Michael Barr, your predecessor, he gave a speech last week where he said, quote, weakening regulation often drives risk-taking and increases bank fragility during the boom, meaning kind of the boom times, making the ensuing bust more painful. In other words, he's basically suggesting that deregulating during times of strength can have worse outcomes down the road. Is that a concern of yours?
Well, I wouldn't call my approach deregulation. What I think we're looking at is making sure that the regulatory framework is appropriate for where we are in the system now. We've more than doubled the level of capital and liquidity in the system since the 2010s. And so I think now is the right time for us to understand what works, how we can improve the framework, how we can make it more transparent and more interactive so that it works together in a way that makes sense.
We've seen a slew of headlines over the last few weeks raising questions about the Fed's independence. President Trump, taking aim at Fed Chair Powell. Are you concerned at all about the threat to Fed independence right now?
Well, it's very important, and I've said this a number of times in the past, that we maintain our independence with respect to monetary policy. I think that's very clear. But we also, as a part of that independence, have an obligation for transparency and accountability as well. But we also have an obligation, in my view, as we have throughout the time that I've been here on the board since 2018, to listen to a broad range of voices and to understand how others are viewing the economy and how that should influence our decisions in monetary policy making.
I want to ask you about supervision as well, because the Fed, and I know you've cited this in a speech, you say that 2/3 of banks were deemed unsatisfactory last year. You're reforming the rating system, and you think the problem, I assume, is the grader, not necessarily the test taker here. And that is especially true since Silicon Valley Bank, I believe, in the years leading up to its demise, had a satisfactory rating, and then ultimately, we saw what happened there. Because of these poor ratings, there are many banks in the penalty box. And I'm just curious if you think reforming the rating system would allow more banks to merge, and whether you think that's necessary.
So let's start with the rating system. So we made some changes to the large bank rating framework back in 2018 that allowed for one particular category to bring down a bank's grading, which to make it not well managed versus well managed. And when you have three components, two of them are related to their financial condition, and one is related only to their operations and other non-financial factors. It doesn't make sense that we would allow non-financial factors on their own to degrade a bank's financial standing. So the changes that we made balanced that outcome a little bit more. It requires at least a downgrade in one of the liquidity or capital components, in addition to potentially the GNC rating system. And it's important that we do look broadly across all of our ratings frameworks to ensure that we're calibrating them the right way and emphasizing things that are likely to bring a bank down. I think part of the problem with Silicon Valley Bank in particular was that we focused on things that were not financially related. I mean, all of these things were available for us to see if we were looking at the reports. So it's important that we're focusing on financial related factors when we're thinking about the condition of a bank.
Are there areas that you think warrant more regulation? And I ask this because under the current capital framework, we've seen a lot of activity get moved into the non-bank financial sector, into private credit, for example, direct lending. Do you think that warrants more scrutiny, more attention in this new environment?
So in my mind, I'm a banking regulator, and the Federal Reserve oversees the banking system, but also financial stability. So from my perspective, I think expanding the banking perimeter would be a better outcome to allow banks to engage in what were traditional banking activities like mortgages, mortgage servicing, those kinds of activities. I think the risk weightings in the capital framework that we have now have really limited banks' ability to engage in those, especially our smaller banks.
Big banks right now, guys, absolutely begging them to stop or pause issuing banking licenses to the likes of Ripple and Circle. It is absolutely hilarious, and all I gotta say, man, is Mirdid, I don't know where you are, buddy, but listen.
This is your first test.
You're my boy, Blue. You
I
are.
want to see you die here. Right?
Sir, yes, sir.
Blue, you're my boy.
You're my
Thank
boy.
you,
Let's go, guys. Let's keep it going. What else do we have on the agenda today? Beebs dropping that cheddar. What's going on, buddy? Keep rocking, Rob. We are close, brother. Amen to that, my dude. Amen to that. We are getting close to the end. Otaku, I see you, my dude. I see you, brother. I see you hiding in the wings, bringing that chaos. Guys, listen, if you are not subscribed to Otaku's channel, you're going to have to do me a favor right now, okay? You're going to have to go over there right now. Here it is. Boom, dropping it on you. Let's get him to 1,000 subs, guys. He's got 784. We have fought this fight. We have battled. Let's get him to 1,000, guys. Shoot him a like. Shoot him a sub. It costs you nothing. It's absolutely free. It's the HBO special. Help a brother out. Let's get it done, man. Let's get it done. Let's keep it up with the news. What do we got going on? Ethereum ETF inflows surge amid market rally. The Ethereum market is experiencing a significant upswing as record ETF inflows boost market confidence and price potential. Recent data indicates that Ethereum has attracted extraordinary inflows into its spot ETFs, amounting to 3.2 billion. This marks a substantial boost in institutional interest, likely driving speculative and broader market activities. Institutional players like BlackRock and Fidelity have intensified their participation, though official dates from these companies remain limited. Analysts note that Ethereum's price dynamics are responding favorably to these inflows. According to the Kobayashi Letter market analysts at Kobayashi Letter, Ethereum is in the midst of one of the largest short squeezes in crypto history. If Ethereum rises another 10% from here, analysts estimate that 1 billion more in short positions will be liquidated, likely catapulting the price to $4,000 and beyond. This influx has led to a remarkable rise in futures open interest, now exceeding 80 billion. Such developments are not only enhancing Ethereum's market position, but are also impacting associated assets like XRP and Solana. According to forecasts, if the current upward trend persists, Ethereum's price could approach the $6,800 mark. Experts emphasize the importance of sustained inflows and market momentum in reaching these targets. The Ethereum Foundation maintains its focus on technical advancements, notably with upcoming protocol improvements driving long-term interest. Big things popping, little things stopping. Driving and listening. Well, drive safe, my friend. Absolutely. Yeah, too bad about Aussie, man. Too bad about Aussie. That is too bad. Sad to say, sad to say. What else do we have on the agenda? Let's go back, look over at Bitcoin one last time before we wrap things up. Bitcoin still breaking out, $119,726. Can we close outside this trend line here, guys? That would be bullish for continuation to the upside. So we'll stay on top of it, guys. But for now, Ron says he just subscribed over on Otaku. Thank you so much, man. Help my buddy out. He is a prominent community leader. He's my friend, my brother. Let's help him out, guys. Shoot him a sub. Absolutely. All right, guys. I have a coaching mentorship call to get to over on the Patreon. Get over there for all the latest and greatest. We just did a microcap gem the other day. We hit a 200% return on that. We did a swing trade last week. We hit a 40% return on that, and we just keep going. Guys, listen, 90% of people in crypto lose money. The reason is for that is that 10% of people in crypto make life-changing wealth for themselves. If you're sitting there thinking to yourself that doesn't math, yes, it most certainly does. How on God's green earth do you expect to make life-changing wealth in this market if 90% of people are winning and 10% are losing? Doesn't work that way. It's the other way around. If you want to be part of the 10% of people who actually make life-changing wealth in this space, get over to the Patreon, guys, because it could not be truer that 90% of people in crypto do not make money. There's a variety of reasons why that happens, not the least of which is because most people end up getting greedy. They hold too long or they sell too soon because they're being misled by so many other content creators. Get over to the Patreon. It is less than a cup of coffee a day, guys. Well worth it to get in early on these swing trades, get in early on these microcap gems, our daily altcoin picks, our live streams, the training and coaching and mentorship that you need to succeed in this space, all for the cost of a cup of coffee a day. The link is down below in the description. It's in the pinned comments, guys. It's in the chat. Check it out today. Click like if you like this video. Click subscribe if you really liked it. Gamma says, what time is our Zoom, Rob? It will be, it's probably about 7 p.m. Central, 8 p.m. Just after the evening live stream on YouTube. It'll be after that. So we do the evening live stream at 6 p.m. Central. So it'll be shortly after that. All right, guys. I will see you guys over on the Patreon Live later tonight. God bless and have a fantastic day.